Welcome once again to Let's Talk Money with Mark Provenzano of Hedged Private Wealth. I'm your host, Spike Spangle. Mark, how are you doing this week?
Fantastic.
I must say you are looking dapper.
Well,
so
thank you.
I hope that our show presents as well as you do today. You're looking
I do too.
great. For all of the things that are going on today, I would like to think that we've got to address the market volatility that is happening right now. Folks, if you are concerned about it, especially when it comes to your retirement planning needs, you'll see that phone number right there on the bottom of the screen. Please feel free to call Mark anytime that you need to during the week or weekend, 888-339-2048. This market volatility has a lot of retirees worried. Let's give some baseline, some facts on it. It's the worst beginning to the stock market in 50 years of the year. It is the worst beginning to the bond market in over 40 years.
Yes.
Are your clients calling you worried, or are you hearing more people from your television shows who you haven't spoken with who are concerned about what's going on? Or is it both?
Spike, you said it perfectly. And yes, we are hearing from clients. We're hearing from prospective clients. And it's a big deal. Unfortunately, it's a big deal. And how well you're positioned for that makes all the difference, okay? Do we have a plan in place? That's number one. Do we have a plan in place? And moreover than that, what is inside of that plan, Spike?
Right.
What's really inside of it? I mean, is it hedged for inflation? Is it hedged for the taxes, the increase in taxes as we know that's going to come?
Right.
It's going to happen. So yes, and this is the conversation we have.
Right, and when we're saying hedged against inflation, it's not normal that both the stock and the bond market are down at the same time. Because normally when people see volatility, they say, well, I'll go over here to bonds. That's not a safe play right now. So you need to take into account everything. So I think what you might be talking about is you need to look at the energy sector, and we need to look at the real estate sector. We need to look at rebalancing. We need to take a look at how much risk you're taking because of this market volatility. Because we can't necessarily go to cash, right?
Correct. That's like, we were speaking before. That's a hard correction to take. That is a very hard left turn to take when you just want to go to all cash, because as we know, as history has taught us, it's extremely hard to time the market.
Oh, I'll one-up you on that. It's not just extremely hard. No, study after study show that you cannot consistently time the market. You might guess right once.
Right.
But you've got to guess right twice. When do you get out? When do you get back in? And so on and so forth. And academic study after study after study shows that nobody can consistently. Not even the greatest money managers know when something is going to happen next. So how do you combat a volatile market like that? Can you tell me a little bit about the hedge strategy? What do you do for money management?
Sure. When you see these high inflation, you see the high interest rates, you really don't have to have a PhD to understand what's happening. You just go to the store, right? You fill up your car, you see what's going on. It's costing everyone, viewers, more. It's costing you more money, right? So the bigger thing is to think about, you have a short term and a long term to it. The long term is, of course, what? Our 401s, our, TSAs, SEPs, Simples, all of that stuff, the Roths, IRAs. So where exactly how you structured in that, right? How are you structured? And that's one of the things we look at our firm is because, like you had mentioned, there are plays, there are avenues that we can go to. For instance, the financial sector is down now, rightfully so.
Right.
It's down a good bit from its high. But what's built inside of that consumer, discretion? What's built inside of that? The banks, hey, if there's a good publicly traded bank, maybe we should look at that if their prime core of business is in what? Lending. Why? Interest rates have went up. So obviously they're making more money.
Yeah. For instance, because of those interest rates, and I think that's part of what's playing with these markets. Those interest rates keep going up. It was 75 basis points recently. They're talking about doing that again. Why is it though that it doesn't seem like the regular consumer is getting the advantage of these interest rate increases? Like we're seeing, it's obviously more expensive to get a mortgage now. It's more expensive to go out and loan money. Why aren't we seeing better interest rates, though, with those banks and CDs? We're not getting it.
Exactly. You notice that hasn't caught up because if you recall, high interest inflationary market back in what the 80s and late 80s.
Oh, you're going back there? Oh,
I
yeah,
mean,
you could almost get double digits back then.
Well, exactly. Think about it. Mortgages were what? 15, 16, 17, but hold on. The CDs were right there with them.
Yeah.
CDs were maybe 12, 13, 14, 15. But we're not seeing that. Just like you said, we're not seeing that now. And why?
So are the banks keeping
why
that,
is that
for themselves? Or I don't know. I'm asking you for the why.
It hasn't caught up yet, Spike. As you know,
Okay.
when we have this inflationary move, it takes about 12 months to really for everything this quarter.
Really?
10 to 12 months to really start working out. But what do our viewers do in that meantime? What do they do? And if you're near retirement, in retirement, and we'll talk about this, especially if you just think about it. If you just retired and you have this hitting you right now, you may be taking some distributions, right? So we have a 35.25, I mean, the NASDAQ's down, what, 32, 33, right?
Right.
So let's say you
Tech stocks are really getting
let's say
beat
you
right
were
now.
heavily weighted in that, right? Well, you take, since the first of the year, you're taking out, say, 4% distribution, right? So, okay, so we're down 33, we're down 4 because that's the money we're taking. So all of a sudden, we're starting out almost 40% down the first year on your portfolio.
Right. We're going to continue to talk about strategies and what folks out there can do to combat inflation and this terrible market volatility that's going on right now. Folks, one of the things that Mark and his team want to do for you is a complimentary review. He's going to take a look at your investments. Are you taking too much risk? Are you not taking enough risk? Have you overcorrected the wheel, like he said, and moved over to cash? That might not be the best thing to do right now. Inflation is over 9%. You've got to have an investment strategy that works. It's got to get you through this hurricane that is hitting us. We've got a financial hurricane that's hitting the coast right now. Give us a call right now, 888-339-2048, so you can get your own complimentary review. More with Mark Provenzano and Let's Talk Money when we get back right after this.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Welcome back to Let's Talk Money with Mark Provenzano. He is one of the founders of Hedged Private Wealth. I'm your host, Spike Spangle, and we are talking about today's market volatility. And I've got to ask you then, should a retiree right now get completely out of the markets? I mean, it's different. We talked about overcorrecting the wheel and moving over to cash. That's an overcorrection for many folks. But what about somebody who is, like you say, they're drawing out of their funds right now? If they're drawing out at a 20 or 30% loss to the market, how are they going to make that back up? How are you talking to your retired clients?
Well, Spike, and that's the fine tuning of what we do, and it's getting to know you. But if you look at it on a general scale, what about rebalancing? What about maybe looking at rebalancing?
Okay.
Maybe your portfolio is already set up to endure that top hierarchy of losses. So it's always good to especially in these times, to look at your portfolio. Let's see if there's any hot spots in there, which means we may have some position securities that have well already overcorrected. Do we want to just sit there with them? We can always go to less inflationary products. Okay?
Right.
Always, where we may have a floor, where zero is our hero, right?
Yeah.
And we'll talk about that.
Yeah. It is a great concept right now. For the retiree, I think that's what's going on, is that there's a lot of fear and you don't realize there is a great opportunity out there in rebalancing. What is the adage in the market? Sell high, buy low, right? Sell high, buy low. There is an amazing buying opportunity right now if your portfolio has been set up properly by a proper money manager who had expected it. So this is something you've been doing for a long time. So this isn't your first rodeo,
No, it's
right?
not.
This isn't the first time that we saw the blip in the market 2 years ago. It went down, but it came right back up.
Yes.
Is that what people can expect out of this one, though?
You're right, Spike. It did. During COVID, it did go down for those 21, 30 days, and we came right back up. Like we like to say, that was like a black swan event. That doesn't always come back like that. It doesn't always happen like that. I mean, we see our average is really 12 months. We'll have 12 months of red, if not longer than that. For the full recovery, sometimes you're talking in 5 years.
Yeah.
Okay, for recoveries. You can look at the '08 for that, the home crisis on that. So yes, you're 100% right. Knowing what you have right now, do we have some securities in there that are inflationary protective? Maybe we can even position more of the percentage of the allocation of that account to something that maybe you wouldn't have thought of before, that could really, really help you out and give you a more steady, guaranteed income where there's no risk. But that is another avenue that must be discussed to see if that's appropriate for you.
All right. Well, I'd like to press you a little bit on that, if you don't mind. So how do you provide consistent income from somebody's savings, from their nest egg, during volatile times? I mean, it's the ups and downs. Are we talking about getting some of it out of the market? I don't mind if we talk about products here. If we're talking annuity, are we talking about just a lesser strategy, or just pulling back the risk and saying 2 or 3% is okay? Because I think a lot of people out there, they try to swing for the fences. I want to get the most amount of the returns that's out there. Well, the problem is when the market drops 25%.
Exactly.
So how do you provide consistent income?
Like you said, Spike, the market and a lot of the leading authorities will say, hey, it's on sale right now, right? It's on sale.
Yeah.
But like we're discussing, the proper balance that's the key. And really that comes from conversation. That comes from you telling me, what do you want your money to do? Because that's really what it's all about. It's not about us, and we must uphold the fiduciary standard, correct? It's all about you. We do what you want. But to answer that directly, it could be an annuity. It could be a form. And why not? You have a floor. My clients that I have in those types of strategies, they're sitting at a zero, where everyone else is down 25, 35% right now.
And it's not all or nothing.
Right.
Absolutely. You have your safety buckets, you have your growth versions of what's going on. You say, hey, you want to cover your minimum costs? You've got your Social Security. We've got maybe an annuity or something to supplement it with. And we mix the strategies. I think the problem is that too many people look at their life savings and it's all invested the same way.
Correct.
So what you're saying is you kind of you portion it out into different areas?
We diversify even on top of diversifying. And that's one of the things that we'll talk about is diversifying. You know, there's a lot of talk out there amongst being diversified. Well, realistically, I could not tell you. That's 90% of the clients that I have and come see me. Everyone, when they first come, they think they're diversified. But realistically, everything is just on top of one another. They're holding energy on top of energy. They're holding financial sectors on top of financial, and all these different mutual funds that are very expensive. Not that they're bad, they're just very expensive. There's other ways we can achieve what our clients out there want to achieve. And it may be simple strategy as an ETF. I was looking at one before coming on to the show. It had a 0.13 charge. With mutual funds, you may be starting at 1.25, then you're paying the money manager a certain part, then you're paying the advisor a certain part. So when it's all said and done, the biggest thing is Most of these folks they don't know what they're being charged. And that's one of the things we give you when you come into our office. We look at your fees. We're very upfront and honest with you. We give you the reports and we show you. I sign off on it because from the Morningstar reports or the Bloomberg that we look at, we give our folks all of this so they can make an educated decision. Because that's one of the things about us at Hedge Private Wealth. We like to empower our clients. We want you to know what's going on. When you hear something happening in the news, we want you to have an idea, oh, my advisor spoke to me about that. I know what to do. Let's just sit tight. Let's sit tight. I think we did our plan. The plan's gonna play out just as we want, so there's no big upset. There's nothing to get upset about.
And that's part of it, is actually
Yes.
having the plan, written plan,
yes.
printed plan, however you want to
yes.
look at it. It's not going in blind. It's not flying into the storm without having a radar on.
Yes.
You actually know what's going to happen. Folks, do you have a strategy like that yourself? Are you comfortable with knowing what's going to happen next with your portfolio if the markets stay down, if the inflation stays really high, when taxes go up on us later? You need to have a complete review, something that will take a look at both your fees, your risk, your taxes, your legacy planning, all of that encompassed. And that's exactly what Mark Provenzano and Hedged Private Wealth do. The program is Let's Talk Money. Why? Because we want to empower you with as much information as possible. But the real power is picking up the phone and talking with somebody like Mark, somebody in their team who can help you out there. In the complimentary review, I'm always skeptical of the word complimentary.
Yes.
Right?
Yes.
No strings attached. How are you able to do so much work and look at all of this? Why do you do a complimentary review for folks?
Because the folks that come to us, Spike, we know that they're serious. We know they want answers, and they want to know all what they're doing is correct. And as a friend, we tell you, we're going to see you in the malls, the stores and such. So we want that to be a very, very nice conversation we have. And we want it to be a conversation with integrity to tell you where you are. If you have any things that maybe should be adjusted, we'll share that with them. We'll tell them. We hope they'll do business with us, but that's what that first meeting is all about. Let's get to know each other. It's just a conversation.
All right.
Yeah, it's just a conversation.
We're going to have to take a very short break. If you would like your own complimentary financial review, especially with what's going on in these volatile market times, give us a call right here, 888-339-2048. I'll give you a moment to get a pen, or you can even just take a picture of the screen right here. Make sure you remember that number. Continue watching the program, but make sure you take down that phone number. You can get your own complimentary financial review. More with Mark Provenzano and Let's Talk Money when we get back right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have. By running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no obligation, full-blown financial review today.
Welcome back to Let's Talk Money with Mark Provenzano. He is one of the founders of Hedged Private Wealth. I'm your host, Spike Spangle, and we are talking about market volatility, especially for today's retiree, what to do and solutions for yourself out there. If you can, there's a phrase that we talk about a lot inside the industry. It's called sequence of returns risk.
Yes.
Now, what exactly is it? Can we break that? Can we get out of the jargon and
Sure.
can we explain that to folks?
Sure. You know, there's a study out there, viewers, and the sequence of returns, it's so important for when you retire or you're getting into retirement, to how do the actual percentages of your portfolio, how do they fall? And the worst thing we can see, as we know, from back in the 2000, the dot-com, and the 2008 housing problem we had, if you start off your first 2 years in negatives, we have a problem. Compounded on top of that, if you're pulling monies from your retirement accounts. So you think about that. We're starting at a tremendous disadvantage, and this is why a plan is so important to have in place. And what we found out, if you look at those numbers, the sequence of returns, and you flip-flop them, we have this, and I talk about this in my seminars. We flip-flop those returns for the investors or the retirees. The same numbers, you're starting out with negatives and you're finishing up positive. Well, suppose you start out positive and you finish up with negatives. Tremendous difference in numbers.
Right.
I mean, vast difference.
And from the news stories we've all paid attention to recently, there's another phrase out there called the Great Resignation. There's a lot of people who tapped out after COVID and said, I'm going to retire right now. I want to get out of this. They're in the midst of negative sequence of returns right now. There are some folks who are starting to go back to work or looking to polish up that resume and so forth because we're not sure if their retirement savings are going to last. What can we do to control sequence of returns, though, before becoming a victim to it? I think, you can't control what's happened to the markets now, but if you're thinking about retiring next year, or you have retired and you're fearing what's going on, is there anything we can do to correct this?
You know, Spike, thank you for asking that because, excuse me, this is where my accounting degree comes into play, okay? I like to say everything is math and science. I like to say that. However, we must get to know you first because we need to know what you want your money to do. It's not up to us. But the math and science part, right? We like to know, what are your fixed expenses? What are your variable expenses? Accounting terminology, let's look at the cash flow statement. Let's look at the cash flow statement,
I appreciate it. I like us
Let's look at that.
to simplify it for folks.
Yeah.
But yeah, you want cash flow, you say, what do you spend per month? And how many times do people come into your office and they don't know exactly what they spend per month? Or at least even between couples?
90% plus. Really, 90% plus. We see our engineers who are pretty good, the accountants are pretty good, but that's something we at Hedge Private Wealth, we try to get that on the table immediately because that tells us where you want our recommendation. We're going to give you our recommendation. But the old adage is, right? Good data in, good data out. Bad data in, the bad data out.
I remember.
So, yes.
I remember from an economics class I took 3 times. That's right. Good data in, good data out.
Yes. So if we can just know that, Spike, if we know that, now we have a basis to know where are we actually going. Once we do see your portfolio, we do see where you are now versus maybe what we could do for you going forward. And we usually do improve because that's one of my biggest things. If we cannot improve upon your situation here at Hedge Private Wealth, we're going to tell you up front you're fine.
All right. I do have to ask this because this might be on some people's minds right now. If somebody's taking a 20, 25% loss, is it too late to come in and talk with someone like you? Is it too late to make up those returns?
Fantastic question, and thank you for that. The answer is no, viewers. The answer is absolutely no, because from past history, is this the floor we're at? We don't know.
Yeah.
It might be another 25, 35 points on top of where we are right now. So we don't know where the floor is at. A crystal ball, like, Spike, I'll give it to you. You always talk about the crystal ball.
I do. You know, I've got a crystal ball, and it looks more like a bowling ball. It's black, and I don't see anything out of it. I get no information from it.
That's right.
But yeah, none of us know where things are going to happen next. I would say this: I think there's great feeling across economists around the world. This is going to be here to stay for a little while. Maybe a year or two, and I don't think it's too late. I think if you haven't done something, right now is the time for action.
Listen, inflation is not going to just come straight down, just like it went straight up. That's not going to happen. That takes time for that to come down, and we're going to notice coming up here shortly, Spike. All of our S&P 500s, a majority of them are getting ready to do what? Report earnings. We're going to see the effect of earnings because with higher borrowing cost. For these companies. What happens usually with that? If you have to borrow at more of a higher interest rate, guess what? There's less growth.
Right.
Or vice versa. If the company tends to use all of their cash, now we use the term in the industry, they're going through their reserves, their internal cash burn. That's not always good either because that's also brought to light on what? The 10K reports, that's the Securities and Exchange Commission reports that they file when you're publicly traded. So we, viewers, we know this. Well, I say we, Hedge Private Wealth follows this on many companies. So we know what's happening. We know what's being reported to the SEC. And we have already looked at a lot of these reports. We've attended the earnings conference calls. So we know what's going on before they even come into our office.
We are going to have to wrap up today's program, but this is exactly what you're paying attention to every single day in the offices at Hedge Private Wealth. The program, of course, is Let's Talk Money, but let's talk your retirement money. Come on into the offices. Mark, I want to ask you, got about a minute left here, so tell me just a few things that you might be able to hit in a complimentary review.
Sure. Folks, in a complimentary review, when you come in, it's very relaxed atmosphere with us. We're going to look at it, be it on a serious side, we're going to look at some really 4 main things for you. How about we look at your risk inside of your portfolio? Do you know it? How about we look at the fees, which are usually embedded and very hard to find out? Do you know that number? Let's look at your true diversification, and I'll help you with that to understand true diversification. And fourth, and most importantly, how about a nice income plan that's going to tie everything together? You have a plan with us.
Mark, thank you so much.
Welcome,
We're going to be
Spike.
back again next week. Folks, if you would like your own complimentary review, and I can't imagine why you would not, especially during these times, all you have to do is call the phone number you see right here, 888-339-2048. So you can talk to Mark Provenzano of Let's Talk Money, and more importantly, the firm of Hedged Private Wealth. I'm Spike Spangle. I'm going to be back again with Mark Provenzano once again next week. Thank you so much for watching. We really appreciate it. Take action for yourself, folks. We'll be back again.